This is section 2 of section 5. And as I said in the first section, because I have so much material to cover, I will not be actually showing you anything in QBO itself. The other thing I want you to take note of is if you see this yellow important box pointing to a specific set of notes, you want to make sure you have that down. And then also make sure you write everything that's on the summary pages. Those will be in bold. Okay, price rules. Sometimes clients want to offer discounts on select products and services to gain new customers, avoid loyal customers, or to get rid of stagnant or out of season items. As we all know, discounts are a reduction of the price of a product or service, and this reduction can be a set amount, like $5 off or buy one, get one free, free shipping, or maybe set employee pricing. Or it could be for a percentage of full price. So it could be like 20% off sale or the 2/N30, which that means you'd get 2% off if you paid within 10 days of the invoice date, or you have to pay the net amount, the total amount, by the 30th day of the invoice date. They may run for a specific date or dates, or they may be indefinite. Here are some examples of price rules a company may implement. A client who sells both directly to consumers and to other businesses can use price rules and set up wholesale versus retail pricing. Or a client can offer a promotion such as a back to school sale on certain items or end of season sales. Clients can offer discounts to different groups of customers like students, seniors, military, or members of specific organizations. 3 methods to implementing the price rule feature is percentage method. This increases or decreases the sale price by a specific percentage for a particular customer type or sale. This could also apply to employee discount programs or senior discount programs. Then you have the fixed amount. This allows your client to give a specific dollar discount. So you could say, let's say $100 off new installations during the month of January. And then you have the custom price per item feature. And this option allows your client to set specific item pricing that isn't a percentage or fixed amount discount, but for select customers. My favorite example is like where Bath and Body Works has the $3.95 sale on all specific items. Setting up price rules. And if you see there's that important box, you would go to the gear icon and then you would select account and settings. You'd go to your sales tab, select anywhere in the product and service section to enable editing, then activate the slider to turn on price rules. And then you would select save and then go to the bottom and go to done. So if you see that here, there's the sales tab, you'd go to the product and service section, and you'd make sure you have that slider over where it says turn on price rules. Click save and then you go to the bottom of the page and click done. Make sure you have that in your notes. Creating price rules part 1. Clients may choose to apply a price rule to individual customers, to all their customers, or to a select group of customers. To apply a price rule to a specific group of customers, you must first create a customer type, then select the customers to that type. So you would go to Customers tab in the Sales sector, then you would select Customer Types. To set up a customer type, you would select New Customer Type button. You'd give the new customer type a name. This, in the example that they have in the training group, they would say gold tier, silver tier, or bronze tier, and they have you, they show you pictures and setting up those particular tiers. So if you want to go to the training section and see how this is done, so you can have a visual, go ahead, and then you would click Save. Part 2. Clients can create as many customer types as they need. Once the customer type is set up, you can assign customers to it. Go to the Customers tab, then select Customers to assign to the customer type. From the Back's Action drop-down menu, you would select Customer Type, and then select the customer type to assign to the selected customers. And then finally, select Apply. Now that you have set up the customer type and assigned customers to it, to view which customers are assigned to which customer types, select the grid gear icon above the customer list and check the customer type box. This adds an additional customer type column showing the assigned customer type next to each customer. Again, if you were to go to the Pro Advisor section and training, you'd be able to see the visuals on this. Part 3. Select the gear icon and then select all lists. Because the price rule feature has been turned on, you could select it from there. So you'll see price rules. This opens up a page showing the client's existing price rules. Note that if you also access the price list, you can also access the price list through the Sales tab, and going to the Products and Services section, the More, and then Price Rule. Select New Price Rule, and this is the first price rule to be set up for the client. A splash screen will open, allowing you to create your first rule. Enter a rule name. So for example, if you wanted to do employee discount, you would give the name employee discount, and you would select an option from the customer drop-down list to assign customers to that particular price rule. Part 4. Next, in the product and services drop-down, select the type of product or service the price rule should apply to. Select the price adjustment method. If your client wants to give these employees, let's say, a 20% discount, then you would select percentage. In the next drop-down, select either increase or decrease by, and in our case, we would say decrease because we're giving an employee discount, and you would set the percentage at a particular rate, and in this example, it would be 20%. And then you would select rounding if in the drop-down section and select the rounding option, or leave it at no rounding if you didn't want that applied. Next, set the start date and the end date, but if this rule is for only a limited period. If it's not going to be for a limited time, then leave that blank. Select Apply Rule and then Save and Close. And then that's done. The next time the client creates an invoice for a service for one of their employees, that 20% discount should automatically be applied. Creating an invoice with a price rule. So you're going to create a new invoice. Well, we already know those procedures. You go to plus sign new and you select invoice. And then using that training section, as we said, you would select one of your gold tier customers if that was what, so this is from the training section. And you would see the gold tier client group, and then you would see the drop down and you have all the customers that you applied to that group. So when the appropriate product or service is selected, and then adjust the pricing appear in the rate drop down, your client can choose either the discounted rate set up by the price rules or by the default sales rate. So here's our price rule summary. Your client is planning to give your employees a 20% discount off selected products. Although your client is able to see the price rule in the drop-down list, they're not automatically applying it to any of their specific employees. What could be the reason for this? The answer to that was the price rule was not applied to the product. Because remember, we had that step where we also had to select the specific product. So the answer to that one, if it's not applying to the employees, then the product might not have been applied to the price rule. Here's question number 2. Your client wants to offer their wholesale customers a 10% discount. Which 2 QBO features are used in the process of the setup? Customer types and price rules. The next section we're going to go over is budgets. So money management is an essential part of running a business, in that cash availability is important for immediate expenses like employee wages, rent, and loan payments. With QuickBooks Online Plus and advanced subscriptions, clients can easily create budgets that support business planning. This allows them to prepare for future time periods and ensuring sufficient cash to cover these type of expenses. Because obviously you can't run your business and tell your employees, listen, I can't pay you this week. Or tell the bank, I'm not going to make my loan payment this month. Because now you're already starting off on the bad foot. So you want to make sure that you're budgeting according to the fact that you have a cash flow that you can take care of your immediate short-term liabilities. Okay, so you want to make sure you're ensuring sufficient cash to cover expenses, whether the goal is to maintain a positive cash flow or expand and grow over time. Here are some key factors on budgets. Budgets can only exist for temporary accounts. So this is our profit and loss accounts. There are no budgets for permanent accounts, and those would be our balance sheet accounts. Budgets can be created, copied, edited, and deleted. A budget can only be for 1 year period of time, but you can create and manage several different types of budgets, and we'll talk about that in a future slide. Budgets are based on a fiscal year setup. They can't be based on calendar years unless the fiscal year starts with the calendar year. The budget year must start with the first month of the fiscal year, so the fiscal year setup must be correct in your accountant settings area. If the budget is to be based on the current year's actual data, it's encouraged that your first year should be year-to-date profit and loss detail report, and you want to make sure that all the period transactions have been assigned correctly. If transactions haven't been assigned correctly, these miscategorizations will make the new budget inaccurate. Alternatively, you can base your budget on the previous fiscal year's actual data, and in that case, customize your profit and loss detail report to show those amounts. Do this by selecting last fiscal year or last year if the fiscal year ended in December 31st of that year. And you do that under the report period when you are inputting the information to run the report. This is shown in the next slide. So here is where you would select the time period. And so for this one, they said last year. There's more visuals on this in the training section if you'd like to look, if you're not familiar with the terminology I'm using right now. Creating a budget. To create the budget, you would go to the gear icon, and then you go to budgeting. Next, you would select add budget. You'd enter a name for that budget, and then you would select from the fiscal year drop-down what year you're going to be using. And then from the interval drop-down, you would choose whether you're going to do monthly, quarterly, or yearly. You see I have that important arrow here, so obviously you want to make sure that you know the interval options are monthly, quarterly, or yearly. The most commonly used by businesses is monthly. Next, from the pre-filled data drop-down menu, you would select the preferred option. Then select an option from the subdivide by drop-down. If the client has location or class tracking enabled and actively is using it, they could opt to split the budget by class, location, or projects. Then you would select Next. Now you can enter the figures for the budget one line at a time. To copy an entire across the whole row, select the blue arrow. Select the grid gear icon to change the view by from monthly to quarterly or to annually. QBO will display the recalculated budget according to the time period. Here you can also select whether to hide blank rows or not. And then finally, click Save. Budget Reports Part 1. For an existing budget, a client can run two different types of reports. There's the Budget Overview Report, which depicts a summary of budgeted amounts set for that specific budget. And then there's a Budget versus Actual Report, and this depicts a summary of budgeted amounts versus the actual amounts of their differences in dollar amounts and in percentages. How do you run a budget report? To run either type of these reports, you're going to open the Report Center, which is in your navigation pane on the left-hand side. And on the top right, you would click inside the search bar, and you would start to type the word budget. And once you do that, those two reports will pop up, and then you would select which one you want. You can also run a budget report by going to the gear icon, and then budgeting screen. Find the budget you want. Use the drop-down in the action column to select the budget you want to see. And then when you select Run Budget versus Actual Report, the whole range of customization options appear in the header section. And then you would see the Customize button, and that allows you to further refine the report by choosing which grid to show and then filtering by the available choices that they have there. Note, there's a budget drop-down in the header section, and from here you can switch to a different budget if more than one has been created. The next slide shows this section in the budgeting screen. So I hope you can see this whole thing. It's bigger than the slide, but I don't necessarily show the slide anymore because of that. I wanted to show how you can come down here, and then this is where you'd be able to select the Run Budget versus Actual Report. Okay, so here we are on our budget screen. This is where we'd be able to add a new budget, but then all the existing budgets are here, and you would go down to the action, and then there'd be an edit. When you click on the drop down, here's where you would select what you want to do. All right, part 3. When you run a budget versus actual report for a budget that was subdivided, the example provided in the training section was for a customer. You expect to see columns just for that customer. In fact, you see columns for every customer, so you would need to filter the budget for that particular customer. In the Customize Report area, you would select the appropriate selection. So you can see here what they have here. They have accounts versus month, accounts versus quarters, accounts versus totals. So this is where you would select what you are wanting to customize it by. Your clients can benefit from comparing customer estimates against actual job costs. The main difference between using estimates and using budgets is that estimates use items, whereas budgets use accounts. You can enter estimated costs into a budget, but not into an estimate. Then that client can create a budget overview report showing these estimated costs and then sending it to the customer as well if they'd like to see that. All parties now have more information going forward. Because QuickBooks Online allows you to create multiple budgets, you can create a budget for each job. To do this, you create each budget from scratch, subdivided for each particular customer, and then you specify the customer job and enter the estimated income and cost details for that job. To use budgets to measure customers' estimates against job costs, you would follow these steps. Run a budgets versus actual report and rename it as estimate versus actual report. Then customize the report to filter for specific customer jobs. Remember that a budget can only be created for a fiscal year, so you would have to create multiple budgets for jobs that span more than 1 year. So here's a screen where you could see how we would do that report. So you have your estimate versus actuals. And here you have your save customizations. Once you do that, you'd be able to, and you know, a lot of times they say save that one template and then use that template as the one that you use all the time, as the main template you use with their other customers. So yes, budget figures are the same for both cash and accrual accounting methods. By changing the accounting method to cash, your client can compare actuals, including costs and expenses, to the budget for a project and see the cash flow impact. Budget projections for projects spanning over 2 fiscal year periods. So remember, we said that every project has 12 months or less, but can spill into 2 different fiscal years. So let's say we had one and it started October 2022 and it ended August 2023, but your fiscal year is January to December, ending December 31st. So you and your client can use this workaround method. So in the accounting settings, you would temporarily change the first month of the fiscal year to match that of the project. So in this example, you would go to October 2022. That would be your first month of your fiscal year. Then you would create the budget subdivided for that project. You would then go back and change the first month of the fiscal year back to the original date, January. The business overview and the budget versus actual report that you would have created for the project, it will already be based on that 12-month year period that you adjusted by you temporarily changing it for October 2022. That stays. If a particular project takes longer than 12 months, you'll need to create separate budgets for each 12-month period. You may also need to change the first month of the fiscal year of the company to match the fiscal year of the project, as I explained in the last slide, and then create multiple budgets for each year. Then change the company's first month to the fiscal year back to the original date, as I explained in the first slide. So it's possible to do it, because I know I said in the beginning, budgets are only for a 12-month period, but it is possible to do if it's longer, but you'll have to create separate budgets. So here's my budget summary questions. When creating budgets in QBO, what are some options you have? Budgets can be prepared on a monthly, quarterly, or annual basis. Multiple budgets can be created and then copied and edited at any time. Here's another question. What are some key benefits of budgeting? A budget can be used to estimate income and expenses to help predict future profitability. Budgets can be used for measuring customer estimates against actual job costs. Budgets can be subdivided by class, customer, location, or project. And budgets can be set up based on the last fiscal year's financial data. Now that's a lot. That could be written in different type of questions. Just want to make sure you have that in your notes. When one of your clients want to create a budget based on their customer, and they want a report that shows actuals versus budgets for that customer for the quarter of 2022, what customizations are necessary? Well, you would select that customer's budget, select the grid option, account versus quarters. Remember I showed you that picture. And then you would filter for that customer. So those are the 3 steps. Select that customer's budget. Then from the grid option, you would go account versus quarters, and then you would filter for that particular customer. Bank feeds. This is a huge section. This is a very big section, just to give you the heads up. All right, so connecting your bank account to QBO is quick and easy. And once connected, you will have access to banking and credit card information. The days of manually entering every transaction in your accounting software are over. Bank feeds allow for banking and credit card transactions to be reconciled and reported in a more efficient manner. QBO's Banking Center works hard to suggest matches as bank feed activities come in, but the functionality is only as good as the data already entered. QBO may not suggest a match, or it might suggest an incorrect match, and therefore it's important to double check each transaction and try to identify matches for your bank feed transaction. First, QBO software will use logic to start the process for you, and we'll look at what that logic is in a second. Part 2, basic principles of matching. When QBO downloads transactions from a bank or credit card account, it compares the data against your client's QBO data to see if there's a match. If there's no match in existing transactions, QBO then expands its search to open balances. If there's no matches anywhere, it looks to see if there are any rules that would apply. We'll talk about bank rules after this. If there's no rules, it suggests any transactions for which the bank description was downloaded previously and transactions were added. The suggestion is the same name and account used previously. Finally, QuickBooks Online makes an educated guess. Part 3. What should you or the client do when QBO finds and suggests a match? You and your client should choose to accept any match that QBO finds or suggests that you have confirmed are correct. QuickBooks Online then either links the bank activity to an existing financial transaction already posted to the general ledger, or records the payment on an open invoice or bill transaction to close it. It also does this for any transactions your clients have matched manually. Matching also changes the reconciliation status of the transaction from unreconciled, which would be blank, to C, cleared. Of course, if the transactions weren't in QBO before the bank feed activity was downloaded, your client will need to review the transactions, assign them to the categories, and add them. QBO looks for up to 90 days after a transaction's date to find matches. It only looks to match against uncleared transaction. If the transaction is processed outside of the 90-day period, your client will need to manually match the transaction. Part 4. QBO reviews all sales transactions, including invoices, sales receipts, and payments received, as well as deposits during the matching process. QBO also looks at journal entries and other positive or credited transactions that may have been created, as well as open invoices and partially paid invoices. Sometimes QBO doesn't suggest a match or suggest an incorrect match, and this may happen because of the following reasons. the transaction is already reconciled, the transaction was by mistake posted to the wrong account, the data range for searching is not correct, the amount of the transaction posted in QBO is greater or less than the amount that cleared the bank, or transactions were not entered using the same bank account. When QBO, now we're looking at manually matching. So part one, manually matching. When QBO doesn't make a match, you and your client need to look for the transaction and manually match it. This helps QBO improve its ability to find matches in the future. How? Because when you do make that match, QBO is now going to add that in as, okay, I see the connection here. And hopefully the next time, QBO will suggest that match for you. So how do we do that? You select the transaction in the banking center. If an incorrect match has been suggested, select Find Match and then Find Other Matches to open the Match Transaction screen. QBO only shows suggested matches. If you want to look at other transactions, use the Suggested Matches slider to turn this feature off. To help locate the transaction, select the transaction type from the Show dropdown. Part 2. Select the transaction in the banking center. If an incorrect match has been suggested, select Find Match and then Find Other Matches to open the Match Transaction screen. QBO only shows suggested matches. If you want to look at the other transaction, I think I just said this. If you want to look at other one, you would have to go to the Suggested Matches slider and turn it off. I think I didn't add this in. Note that you also use the search field to enter specific search terms such as the name, a part of the name, or an amount. So if it's a specific amount, I might be able to find it that way. Part 3. If the transaction to match is outside of the selected date range, change the from and to dates. Then check the box next to the transaction to match with. The total amount of the transaction and the amount in the bank feed should be the same. If the amounts are different, use the Resolve slider and enter the appropriate transaction until the difference is 0. When dealing with multiple transactions involving the same amount, be careful to match each of the transactions properly. Lastly, click Save. Now let's look at troubleshooting. So if you and your client still can't find a transaction that was entered in QBO, check and make sure that the transaction has not already, by mistake, been reconciled, or was maybe entered using the same bank account, has not been previously matched to another bank downloaded transaction. And another common problem with transaction matching is that the bank feed entry can be matched to more than one of the QBO transactions. This can lead to multiple transactions being recorded in the bank register. The bank register then doesn't match the bank statement, which can cause problems when reconciling. All right, bank feeds with multiple invoices. When you or your client select multiple invoices to match to one bank feed, one received transaction, QBO records separate deposits for each invoice. The deposits won't match the single or combined deposit transaction on the bank statement. The same holds for bills. So suppose one purchase transaction downloaded from the bank is matched against multiple bills that you made several installment payments on. In that case, QBO records separate bill payments for each bill matched and therefore won't match the bank statement. Because the deposit pays multiple invoices, you would select Find Match and then select the invoices paid. So here's the visual. So here you might have a specific amount, but you had it for 2 different bill payments, 2 different installment payments. And then this way you would select these 2 payments for this one amount. Because the deposit pays multiple invoices, you would select Find Match and select the invoices paid. When individual bank activities is matched to multiple general ledger transactions, QBO will show that detail from the Categorize tab when you select the multiple transaction link. There's a lot more visuals on this. There's a lot that they cover in bank feeds. I put as many questions as I can in here. You notice there's not too many important, and because I put them in the question area. But if you need more visuals and you're not familiar with bank feeds, make sure you go to the training section. When reconciling a bank or credit card account, the individual transactions must be manually added together to determine the corresponding amount on the bank statement. The bank or credit card account register must agree with what's on the bank statement. It's fine if the bank reconciliation doesn't go perfectly because the matched transactions will be marked as cleared. But you must clear the check marks on the reconciliation for whatever reason. It could be a challenge to manually add the appropriate transactions to match the single amount on the bank statement. To avoid this, and this is a main thing that you want to always put in place for yourself. To avoid this, first do all your accounts receivable and accounts payable. So do all your invoice and receive payments and all your bills and pay bills workflow first. Then let the receive payment, deposit, bill payment match the bank feed. And then I put over here, it takes practice, because I've dealt with many clients that have struggled with this. So if you're watching my videos and you're actually a small business owner, you're not the only one. It takes time and practice. But the more you do it and the more you get used to it and the more QBO sees the same transactions that are being matched, they'll start to eventually get it for you and match it for you. You won't always it won't be such a struggle as time goes by. So finding bank feed matches part 1. Anytime you or your client adds or matches a transaction in the bank feed, it moves it from the For Review tab and it moves it to the Categorize tab. To see which transactions are matched to the single downloaded transaction, select Categorize tab. Find the transaction and select the link in Added or Matched column and it will show the multiple linked transactions. Part 2. If the transactions don't match exactly, use the Match Transaction screen to resolve the difference. You can use this method to write off small differences between the bank and QBO. However, like matching a single downloaded deposit transaction to multiple invoices, QBO records the resolving transaction as a separate transaction from the checked transactions. Again, this leaves multiple transactions in QBO that must be added together to match one transaction on the bank statement. As stated earlier, this could cause problems when reconciling the account. Bank feeds with multiple same dollar amounts. QBO may find multiple transactions that have the same dollar amount in the same data range. And that match could be to one downloaded transaction. So in this case, make sure that you're carefully selecting the correct match. Remember that you don't need to match each transaction individually. You can select multiple transaction and then select accept from the batch actions option. You can also use a grouping feature that we'll look at next. Also, it's common for clients to match transactions incorrectly. If you come across this, you can easily go to the Categorize tab and undo the match. And then this will put those back in the For Review tab. That was one of the Pro Advisor questions. So if it was in the Categorize tab and you clicked undo, it then went back into the For Review tab. Clients can find the process of reviewing the For Review tab tedious because the list of transactions is quite lengthy. You might encounter a similar problem when you're working on a big cleanup project. It's also an issue when you're setting up a client's new QBO subscription and setting up their bank feed for the first time. Because remember, it goes back 90 days. And for me, a lot of times I'm just coming in and setting it up, and the accountant is the one that goes in and does this large journal entry. And sometimes they haven't done that, and the bank feed's already in there, and it's just crazy. So this might need you to enter years of transactions into your accounting system. Personally, I suggest making one large journal entry, setting up each account with their current balance. In situations like these, countless transactions have gone through the bank feed, but you or your client still need to enter or match them to the existing transaction, unless you did the large journal entry first. So what can you and your client do to address this problem? You would select the grid gear icon on the top right in the For Review tab and use the slider to activate Turn On Grouping. And I put an arrow here to show you where that's at. Bank Feeds Grouping feature. Generally, the transactions in the For Review tab will then be grouped by month, and you'll see how many transactions are in each group as shown here. So over here, you'll see it has it month and transactions, month and transactions. Select another column header to the group by a different variable. Grouping can change according to the column you select. Here's another example of grouping by description. So here are your column headers, and you would select what columns you want on here. And in this example, they chose by description. Select the same column header a second time to reverse the order of the grouping. You could do ascending to descending or vice versa. Grouping by description enables you to clear up multiple transactions for same vendors and batching. You could select the checkbox in the group header to select or check all the transactions for a vendor and then bulk accept or bulk update them. Grouping by category or match. This enables you to process all the matched transactions at once. It also lets you to address the transaction for which QBO has identified more than one possible match, quickly leaving the screen less cluttered so then you can more easily review the transactions you need to get to. The remaining transactions are grouped by uncategorized income, uncategorized expenses, or whichever account QBO suggests. This enables you to clean up uncategorized transactions quickly. Remember, you can always filter for recognized transactions to see just those transactions on the screen. I always tell students, once you see that uncategorized income, uncategorized expense, uncategorized asset, you know that something probably wasn't inputted correctly or might have missing information, and you need to clean that up and properly match it to the appropriate transaction. Either way, the issue must be addressed, as these accounts should have a zero balance. For grouping by money in and money out transactions separately, click on either the spent or received column header. Grouping by money in and money out is also efficient if you're concentrating on just checks written and cleared, as well as automatic bank charges, and when you're planning to address and review deposits at another time. When should you or your client check when reviewing these transactions? As stated earlier, you should always complete the proper workflow of accounts receivable and accounts payable first, and then let received payments, deposits, and bill pay match in your bank feeds. So here's our AR AP workflow that we've been talking about. So the workflow for invoices and sales receipts are invoice, receive payment, and deposited funds, and then the bank deposit sales receipt with deposit to undeposited funds, and then eventually to the bank deposit. If you follow this workflow correctly, each received column amount in the bank feed should match perfectly. This workflow also is for bills. So for the accounts payable, it would go bills and then pay bills. And then it should go to, directly taken out of your account. If you follow the workflow correctly, each amount will be in the spent column. And this relates to the bills being paid, and it should perfectly match to the bill payments, even if the payment is for more than one vendor bill. So here's my bank feed summary after all of that information. Here are some questions. What are 3 reasons a previously entered transaction may not be found in the bank feed? Note, slide bank feeds part 4 lists several reasons, but I only have a few here. Okay, so the slide bank feeds part 4 has more, but these are the 3 that I have here. The transaction was reconciled. The transaction was previously matched to another downloaded transaction, and the transaction was recorded using a different bank or credit card account. Here's another question. You need to unmatch a transaction that your client has matched incorrectly within the bank feeds. How would you do this? You would go to banking, you'd go to categorized, and you would select undo. Part 2. Another question. What happens if you don't follow the proper sales flow? And then I just put here in parentheses because there's different type of questions they might ask for specifically accounts receivable, they might ask for specifically accounts payable workflow, or they might just say proper sales flow before reviewing your bank feeds. The answer would be you're going to have multiple transactions in your bank feeds. If you're not doing those proper steps that we talked about earlier, you're going to show multiple transactions that QBO didn't match because you didn't follow the proper steps. And here's the last question. If QBO doesn't find a match in the bank feed, what does it do next? Well, it looks for open balances. It's looking at your purchase orders and your invoices. So it's looking for open balances in any of your purchases or sales. Advanced bank rules. So now we're in bank rules. You save time with automation applied by creating bank rules. Many clients find that around 80% of their transactions are repeated month after month. Manually checking, adding, and categorizing these regular transactions can be time consuming. Clients can also run into problems when they're recording transfer between accounts in bank feeds. Automated rules can help address these issues as well as many others. Well-structured rules can help you and your clients customize and automate data from bank feeds. You can set up rules to tell QBO what to do with downloaded bank activities that meet a particular set of conditions. Rules can include instructions such as automatically posting a transaction to the correct account and assigning pre-specified data such as payee, category, class, and location, or tags. Rules give you control and can take some of the pain out of working with regular and predictable bank feed activities. Select banking. So we're going to create a new bank rule, part 1. Select banking from the left-hand navigation pane and then go to your rules tab. Select new rule and on the right, enter the name for the rule. Clients can now define what type of transaction the rule should apply to and what action it should take. The next step is to specify the criteria that transactions need to meet for the rule to apply. From the first drop-down, specify whether the rule applies to money in or money out transactions. Next, select which bank or credit card accounts the transaction appears in. In the following drop-downs, you would refine the criteria further by specifying the conditions that the transaction must meet for the rule to apply, and whether the rule should apply to any of these conditions. Next, choose how to categorize transactions that meet the specified conditions. Clients can also create bank rules that both categorize transaction and automatically accept them into their books. Do this by moving the Auto Add slider to the on. That would be right over here if you could see it. No, it's a little blurry. However, this auto add feature should be used with caution and only by users who are experienced by working with bank rules. I always say do your homework with bank rules. There's a lot of videos out there and a lot of articles out there giving you step-by-step instructions on how to set up bank rules. Part 4, if your client decides to use the auto on in their rules, once they've accustomed to become accustomed to how they work, they should consider adding a condition regarding the expected dollar amount. This way, if the transaction expense exceeds the typical dollar amount, the rule won't be applied, and the transaction will show up in the For Review tab for you to double check. Any banking rule that you or your clients create will be listed in the Rules tab as shown below, which will in the next slide. For the Actions column, you or they can edit, copy, disable or enable, or delete existing rules from this list. The next slide shows what we're talking about. So here's reviewing your bank rules. So you're here in banking, and here's your rule, and then you have all your list of review rules. Here you'd be able to go to new rule, and then of course here's your action where you're able to do all of what I just said in the last slide. Setting up conditions of bank rules. Let's look at how to set up the conditions of a bank rule so it knows what transactions to look for. First, give your rule a name. So what do you want to call it? You put it right there. Then choose whether the rule will apply to money in or money out, and then select what account it applies to. Next, you want to say if it's going to be based on a description, a bank text, or an amount. What is the difference between a bank text and a description? The bank text is known also as bank detail. That's that raw data that comes out of your bank. So that's going to tell you, the store number, the city, the state, the phone number, the date. You guys all get bank, uh, statements in the mail, and your bank has certain information that comes with each. So these details are what the bank is using, okay? The description is what QBO has shortened and cleaned up and interpreted. So this is maybe more useful in creating a rule because it's going to be a little less bulky in information. And it could actually use, abbreviations. What happens if you select description or bank text? There's going to be three different things. It's either contains, doesn't contain, or is exactly. And you can freeze this right here. I've never had a question on it, but I just wanted to add this in here. You could stop and freeze this screen if you want to write this information down. It's also in the training section. Setting up conditions of bank rules. Next, you would enter the relevant text or reference number in the right-hand fields. What happens if you select the amount in the drop-down? If you select amount, then you get the following options. Choose the applicable option and then enter the relevant amount in the right-hand field. You can add more than one condition to the rule by selecting, and it's right over here, plus sign add a condition, as shown here. You and your client can set up to 5 different conditions for one single rule. Here's an option to specify whether the bank activity has to meet all or any of the conditions before the rule is applied. Once you've specified which transaction QBO should look for, you can define what actions it should take with the transaction that meets the specified conditions. You can also specify whether the rules should assign or exclude transactions to and from these actions. By choosing assign, you or your client can instruct the rule to assign matches of transaction as follows. So you have transaction type, and here are the transaction types that they have, and that's money in and money out. Money out is expense, transfer, and check. Money in is deposit, or credit card, credits, and transfers. Then you have the category. So you're looking at the account in the chart of accounts, categorized. And then you have the payee. So that's either your customer or vendor name. QBO rules. You or your client can also categorize matching transaction by any of the following advanced categorization methods, if they are using them. By tags, by class, or location. Plus, you or your client can create a memo that would be added to matching transactions. What happens if you choose to exclude instead of assign? It's unlikely that you or your client would meet a situation where you would need to set up a rule to exclude a transaction, but it's a useful feature to use when a transaction is recorded but doesn't affect the business at all. Rules apply to unaccepted transactions only, that is, transactions in the For Review tab and in the banking screen. So rules are going to apply to unaccepted transactions, right? Those are the ones that are here, the ones that we haven't matched. Oops. QuickBooks Online uses the following logic when checking transactions in the For Review tab. It first looks to see if the transaction is already recorded. If so, it will suggest a match. If there's no match, it runs each transaction through the list of rules on the rules list to determine if there are any applicable. Rules are applied in numerical order as listed in the rules list. Only one rule is applied per bank activity. The first rule that fits a bank activity is the one applied. To change the order in which rules are applied, drag them up or down in the rule list grid. Reordering the rules list lets you control which rule to apply first. Reviewing recognized transactions. Unless your client has turned on the auto add feature, they'll need to review the transactions that were recognized by a bank rule. They will then instruct QBO to carry out the specified actions for that rule. That is, categorize and move the transaction. To do this, the Banking Center opens the For Review tab and selects the Recognized from the All Transaction dropdown. And then under the category or matched column, a list of all transactions that were recognized by any bank rule will be labeled Rule. If everything looks good, select Add to move the transaction directly into the account. They can also select and remove each transaction before they move it. Before adding the rule, look for a unique identifier in the bank's description of the transfer. For example, transfer out or transfer in, along with all of the other parts of the account number or last 4 digits. You'll create the rule for only one account, and it doesn't matter which one. If you create a rule for each account, you'll end up with duplicate transactions. Let's look at an example. Transferring from savings to checking. Apply the rule to money out transaction. Select only in the savings account. Select bank text as the search criteria, and then set a condition that the bank text contains part of that account number. Lastly, input info so that QBO knows what to do with the transfer transaction. So you would select transfer as the transaction type over here, and then you would select the account that's involved in the transfer. In this case, it's checking, and then you would select save. QBO then adds this rule to the rules list. When a transaction downloads into the savings account, QBO looks for a match. If it doesn't see one, it looks for a rule. Because the transaction is a money out, one from savings, the bank text contains part of the checking account number. This rule will apply. QBO will automatically add it to the transactions to savings and will categorize it against the checking account. Bank rules versus recurring transactions. These two have similar features. A client can use recurring transactions to enter routine expenses like rent or utility bills. However, it's usually better to use banking rules because they consider variation in dollar amounts and dates. So this is easier than fixed amounts and dates or scheduled recurring transactions or checking for and editing reminder transactions. So for example, your utility bill doesn't necessarily, I know if you look at the class that I posted, it did every single month match, but that's not realistic. Your utility bills, your gas, your electric normally changes on a monthly basis. Situations where recurring transactions are better used than bank rules are if your client wanted to create reminders to invoice a customer regularly, but for varying items, amounts, and descriptions, or if the transaction is for the same dollar amount using the same interval. However, if there's going to be any variation of dollar amount, such as an electric bill that varies in charge, like I just said, you want to use a rule. Suggested rule feature. The suggested rule feature works by remembering how your client previously categorized a particular transaction when they added it from the bank feed. This feature recognizes when your client categorizes and adds a similar transaction the same way a second time, and then asks the clients if they'd like QBO to create a new rule that always assigns these type of transactions in the same way. You can edit the rule and add extra conditions. That's what I was just saying earlier. As time goes by, you'll see QBO will start recognizing things and giving you suggestions and then allowing you to adjust those and add extra conditions to them. Automatically adding the categorized transaction to your books. So let's do this. Bank Center, you go to Vendor, Category, select Category or Add New, and then the suggested rule screen will pop up, offering to create a rule with the same payee and account category. If classes, locations, and/or tags are used, the pop-up will also suggest that you enter a class, location, or tag on this transaction. Note that there is a slider here to auto-add the transaction. Remember what we talked about auto-adding. It's better not to auto-add a transaction unless you set a maximum dollar amount. And also, if you're a veteran at this. So I wouldn't auto-add unless you feel confident. If you're happy with the rule, then select Create Rule. To see what the rule looks like or to modify it before saving, select Edit Rule. If the created rule draw In the created rule drawer, you would add a name to the rule, and then you would click Save. Errors with suggested rule feature. Even though usually QBO suggested rule features are correct, they aren't perfect and errors can be made. If you or your client aren't paying attention, you might not catch incorrect suggestions. So what are the most common errors to watch for? When suggested rules is set up to always apply a rule and auto add a transaction, you may not have the opportunity to review and spot any potential problems. Another common issue is when clients are so busy trying to get their bank and credit card balances correct that they don't pay close attention to the payee and category fields in the transaction. Here are two common situations where a client can run into a problem like that. One, the profit and loss statement may contain significant sums in the uncategorized income or uncategorized expense. Or two, when you have a vendor that you both purchase from and rent from, QBO may put the wrong account based on the previous bank feed entry. So instead of putting it as a rental expense, they might put it as an asset because they think you purchased it. Fixing errors with the suggested rule feature. Your client can easily fix these issues in the banking center. They just need to follow these steps. First, delete the rule that is causing the uncategorized income or expense transactions. If you don't delete the rule before undoing the categorization, QBO will assign the rule to the same transaction again, even if you edit the rule and add a condition to it. So you need to delete it first. Then you're going to go back into your banking center and in the categorize tab for each account and undo the incorrect transactions that you have from that rule and put them back into the For Review tab. Categorize each transaction properly and if applicable, create new rules as you go. Note, the accountant tool reclassifying transactions can also be used as a solution. Remember, your accountant has that. The rule may have been set up to record an uncategorized expense if its vendor, the company that they're buying for, sells many different items that affect several different accounts. So let's say like a pool supply company. So a pool supply company might sell several different items and it affects several different accounts. So for something like this, you might want to set up uncategorized expense. And that means every time it comes through the bank feed, you know, or your bookkeeper knows they have to go in and manually put the proper expense. Turning off the suggested rule feature. If your client is not working well with this feature, then you want to turn it off. The steps to do this is you go to your banking center, you go to your For Review tab, you go to the grid gear icon and deselect the Enable Suggested Categorization checkbox. Or to deactivate the suggested rule feature, you can do the following. When the suggested rule pop-up appears after your client records a second similar transaction, select Don't Show Me This Again to deactivate the suggested rule feature. So it won't give you any more suggestions. Or open the Bank Center, go to the For Review tab in the Banking Center for a particular account, then select the grid gear icon, and then simply uncheck the Show Suggested Rule checkbox. Export and import a set of rules. To export a list of rules, you'd go to your Banking Center, you go to the Rule tab, New, Export Rules, and then you would save. It would be a .xls file of the bank rules, and then you would select Close. Notice I have an important there, and I have it right to the .xls file. To import these rules into a new QBO company, we go to Banking Center, go to Rule tab, go to New Rules, then you would select Import Rules. Select Browse, and then you would upload the .xls file, and then select Next. Use the checkboxes to select the rules to import. Look out for any rules that are auto add, and decide if you want to keep the settings in the new QBO accounting. The new QBO company. Then select Next and specify payees and categories used in the rule being imported. Select Import and then finally select Finish. So why would somebody import? This would be to save time. Once you've set up a bunch of bank rules and you have clients that have similar businesses, you would then say, you know what, I have this set up already. I can import this and adjust it accordingly to my different clients that have similar businesses. So here are my bank rules summary, part 1. When creating a bank rule in QBO, what's the difference between the bank text and description conditions? Well, the bank text is the raw data provided by the bank, and the description is the condensed version of the raw data. What statements is true and unique about bank rules in QBO? Rules can have up to 5 conditions defined. What are 2 ways a user can turn off suggested rules in the QBO? Suggested rule pop-up and then select Do Not Show Me This Again. Or you can go to Banking, for Review, Grid Gear icon, and uncheck Show Suggested Rules. What is true about exporting the imported rules in QBO? Any new payee and category can be created in the new company as part of the importing process. What is a reason to export and then import a set of rules to another company file? Because you have clients with 2 or more similar QBO companies. We just talked about that. When do QuickBooks Online suggest creating a new rule? When a second transaction with the same bank description is assigned to the same payee and the account as a previous transaction. So once it happens again, they're going to suggest, would you like me to create a rule? So it's after that second time you do the same thing. Here's another question. Why would you create a rule to post transactions for a particular vendor to uncategorized expense? The vendor sells many different items that affect different accounts. So I think the example I gave you was like a pool company where they have several different things and it could go to several different accounts in your company. And here's the last one. How would you turn off the automatic category suggestions? You could deselect Enable Suggested Categorization checkbox. So I know we have a lot of questions here for the rules, and we went over a lot in between bank feeds and bank rules. I know there probably is a few things that we haven't covered, so please make sure you add them to the comments if I left anything out. And I want to just go back here real quick to this one slide and make sure that I have this described for you. Hold on one second. Sorry about this. Okay, I just wanted to make sure I did describe bank text and descriptions, as I saw that was one of the questions there. I didn't remember going over that. Okay, so those are the questions that I have here for the bank rule. There's quite a few of them. I'm sure there's going to be more. Bank feeds and bank rules have been really huge for the last couple of years, and they will be, I'm sure, something that they'll continue to be working on. We're going to end off with a reconciliation and reports. So reconciliation part 1. As you already know, it's normal procedure to reconcile banking and credit card accounts monthly. When you begin to the reconciliation process, if QBO detects that the beginning balance could be inaccurate, it'll display an alert on the reconciliation screen. My students know that. You need to resolve any discrepancies before starting the reconciliation process for this next month. So what happens is you'll see a link where it'll say, we can help you fix it. And when you click that link, it automatically will open up your reconciliation discrepancy report as shown below, but that I don't have it, I'm sorry. That's in the training section. This report lists any transactions that were changed after the last reconciliation date and displays the type of change and the effects on the beginning balance. In most cases, this report identifies where the problem lies. If the transaction wasn't deleted, you can select it on the report to correct it. Part 2. Once you receive your monthly bank or credit card statement, then you can begin that month's reconciliation process. So being you have the statement now, and you've made any changes you needed if that pop-up came up, and if it didn't come up, we can just go ahead and get started. When you begin the new reconciliation, QBO asks for the statement ending date and the ending balance. It also calculates the beginning balance from the sum of all the transactions posted to the account that were marked as reconciled. The calculated beginning balance should be the same as the previous period's ending balance. Troubleshooting a deleted transaction. So step 1, identify any deleted transactions. When you select the view link in the reconciliation discrepancy report, you can see the details in the audit history screen for each deleted transaction. This gives you the details you need to re-enter the transaction. Step 2, re-enter and match the deleted transaction. When you re-enter the deleted transaction based on the details you already acquired from step 1, then you can match the newly re-entered transaction to the correct bank feed activity. To do this, check bank feeds to see whether the activity is in either the For Review or Excluded tab. If the bank feed activity is in the Excluded tab, select Undo and send it back to the For Review tab. Now step 3, reconcile that deleted transaction. You can do this individually by selecting the status column of the transaction in the account register and then just changing it to R, reconciled. And this will address the opening balance. There's 2 other methods in handling deleted transactions. These 2 other ways to troubleshoot would be to carry out a one-time adjustment reconciliation. So really you would start a brand new reconciliation. You'd use the same date and ending balance as the previous reconciliation. You check off any remaining newly re-entered transactions that did not clear the bank. Make sure the difference between the statement ending balance and the beginning balance is 0, and then select Finish. And then undo the reconciliation and redo it. That can only be done with a QuickBooks Online accountant user. They're the only ones that can undo a reconciliation. Troubleshooting changes to reconciled transactions. Other common causes of discrepancies on the reconciliation discrepancy report is when the status or amount of a reconciled or unreconciled transaction has been accidentally changed by a user. So examples would be a user accidentally selected a line in the register and marked it as reconciled when the transaction was either as cleared or blank. Or they manually marked an unreconciled transaction as reconciled by marking R in the status column. Either way, they, by mistake, put it as reconciled, and this will affect the beginning balance. Other potential changes to the reconciled transaction includes changing the transaction amount, changing the bank or the credit card source account, so by mistake, using your checking instead of your savings, and then voiding the transaction altogether. To fix those reconciled or unreconciled transactions, to fix an error with a reconciled transaction, select the transaction in the reconciliation discrepancy report and change it back to the original reconciled amount, and then save. You can resolve any unreconciled transactions like this. You can select the transaction in the reconciliation discrepancy report and then change the reconciled status to clear or unclear, just make it blank, and then save. We already mentioned that you can access the reconciliation discrepancy report through the reconciliation screen when you're starting, and then there's that warning alert, like, wait a minute, there's an inaccuracy detected, and then you would click that We Can Help You Fix It link, and it brings you to the reconciliation report. That's what we spoke about earlier. But how else can you? And I see both of these are important, so make sure you have them in your notes. Well, you can access it by hitting the History by Account section. So when you go to your reconciliation screen, on the top right, you'll see a History by Account. It's blue. It's a link. You click on it, and that brings you right down to all your reconciliation discrepancy reports. If the above is true, then what is true about the reconciliation discrepancy report? Well, the reconciliation discrepancy report is always visible, even if discrepancies have been fixed. So you can always, access your reconciliation discrepancy report, even if there isn't any discrepancies, by going to the History by Account. So make sure you have these 2 in your notes. So here's my reconciliation summary part 1. I can't wait to stop saying reconciliation. All right, what 3 conditions can lead to the beginning balance of a bank or credit card reconciliation being inaccurate? Here are 3 conditions. A reconciled transaction was deleted, a reconciled transaction amount was changed, A reconciled transaction status was changed to not reconciled. We went over all of those. Here's another question. When you see an alert that there's been an issue before you reconcile and you select the link to the reconciliation discrepancy report and see that there was a check there that was manually marked reconcile, what should you do? Well, you would open that transaction and unreconcile it. Just talked about that too. Here's another question. You find that a reconciled bank transaction has had the amount changed. How can you fix this? Well, you would select that transaction through the reconciliation discrepancy report, and you would change it back to the proper amount, the original amount. And the last question, when a reconciled transaction has been deleted, according to the above slide, troubleshooting a deleted transaction, what would be the best course of action? So we're saying a reconciled transaction has been deleted. What's the best thing to do? Re-enter the transaction, match it, and change the status to R, which is reconciled. And our last section, reports. So report types in QBO Part 1. So there's different report types. There's summary reports. That's like profit and loss. They show the total of all transactions for a list name. There's also balance sheet, trial balance, customer balance, sales by customer summary, and so on. So those are your summary reports. The next one is detailed reports. They provide detailed information about transactions. They also allow you and your clients to drill down on any individual transaction and open them and review them to possibly edit or delete them. Examples would be like transaction detail by account, sales by customer detail, AP or AR, aging detail. The next one is list reports, such as the account list or the product service list. They show detailed information about lists of items. Then you have aging reports, and they show on how many days a transaction is beyond the specific due date. So the most popular are AR and AP aging reports. So those are the four main ones. And then you have special reports. Special reports are like your audit log or your business snapshot. That's something new and kind of popular. The QBO online audit log contains a list of all changes to company data in QBO. This includes transactions entered, reconciliations completed, reoccurring transaction created, and sign in and sound out by users and more. Then you have the business snapshot, and that's a graphical representation of the business's monies in and out transactions. And it's limited because it's more of like something that you customize and it's for visualization. And it's also meant to be interactive. Cash basis reports, part 1. One amazing benefit of QBO is that you and your clients can run both cash and accrual basis reports from the same set of books. They create the cash base report by omitting unpaid accounts receivable and accounts payable transactions, because that's, as you know from Accounting 101, cash basis is just dealing with cash transactions. So you wouldn't have invoices or bills. You're paying everything by cash. Therefore, on a cash basis balance sheet, the AR and AP balances should always be 0. Any open bills or invoices that use a balance sheet account on the distribution or target line aren't reflected in the target account balance. Also, any income received and expenses paid appear on the cash basis profit and loss statement. I'm sorry. Also, only income received and expenses paid appear on the cash basis profit and loss statement. The statement doesn't include amounts in the distribution line for any unpaid bills or invoices. When dealing with credit card expenses, QBO treats transactions in a cash basis environment where a business records credit card activities to a credit card liability account as if they were paid by cash. A good way to remember this is to realize that the profit and loss will always include an expense type transaction, regardless of the report's basis, whether it's cash or accrued. So in other words, it would be a liability expense, or as I put it in my own words, future cash payment expense. So it's something you have to pay in the future for cash, and you're looking at it as an expense. So that's what we would call a liability expense, because remember, you would definitely need to use that for cash basis. All right, so here's the report summary questions. Oh my God, 100 slides in this one. So here are questions. According to the report types, and I spelled that wrong. So according to the report types, slide above, what are the 4 key reporting types in QBO? Summary, detail, list, and aging. Here's another question. QBO allows the creation of both cash-based and accrual-based reporting from the same set of books. When running a report on a cash basis, what are the 2 accounts that are omitted from a report? Well, we just said it, accounts receivable and accounts payable, because this is on a cash basis. So you wouldn't have invoices or bills. Everything would be paid, correct? And the last question, a credit card expense was posted to an expense in 1 month, but the credit card bill was not paid until the next month. When reviewing the cash basis profit and loss for that first month, in which account would that transaction be reported? Remember, I called it a future cash payment expense. That's why I put that there for you. But another way to say it would be an unapplied cash bill payment expense. So this concludes an hour and 15 minutes. We're getting longer, huh? This concludes section 2. Give me a week for section 3. And please add any questions that you got and that I did not have. And this would definitely be, probably in the next couple of months, there'll be more added to this section. So please, pay it forward and share with others. Thank you.